Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York on Cinco de Mayo, May the 5th, 2016, and this is the daily report for gold and silver. Gold trading slightly lower on the day, 1276.74, low 1269.10, high 1286. That's of course if we look at the Forex or spot market. When we look at COMEX today, puts it up about 410 at 478. Silver is trading higher on the day, but fractionally at 1732, low 25 and high 63 on the day. You know, whether we look at price change from COMEX showing it up about $5 on the day or spot Forex showing it off a couple dollars on the day, the characteristics of gold prices over this last week have been consolidating and consolidating with slightly lower pricing. Now, we're looking at a daily chart, standard candlestick format. We had that dynamic breakout back last week. We had a $30 move, of course, this back, what I believe, on Friday of last week, this being Monday, Tuesday, Wednesday, and Thursday. And look at the body size, relative body size for the last 4 trading days. We have seen the market, though, make a consistent move with lower lows, and that's the one thing that we are looking at closely. Low today, 1270. When we look at the market here. Now, market appears as though it has settled at around a 1279, 1278 in that area, but body size has been diminishing first. And then the other thing that we are looking at is in terms of a straight correction in the market, we have plotted one basic fib correction, which in essence goes from about 1228 to about 1306, the top here, and of course a 38% retracement takes us roughly to 1276. And then if we look further, the 50% retracement comes in at about 1267. So that has absolutely been our line in the sand. And up to now, we have seen price points stay above that. Now, of course, with the jobs report coming out tomorrow, we could see some added swings or volatility. What I did find of interest as I watched this market trade overseas last night is that we had a very strong dollar, and gold was still trading up $2 or $3. In other words, it was actually, in terms of normal trading up about $8 at the time, but you had to take away about $5 or $6 because of a strong US dollar. And so you can certainly see dollar strength. This, of course, is a weekly chart that we are looking at with the dollar index. We talked about the fact, and we can convert it to a daily, but you can still see it in this weekly. We talked about the fact that just the other day, this market came under dramatic pressure, actually trading below 92. I believe 91.91 was the actual low. And of course, we've got a major retracement level. This, of course, being our 38% retracement level, roughly in the area of where that low hit, which comes in at about 92. 91.91 was the low. 92 is really a line in the sand. And traders, there's no doubt when the market hit this price point, we had real buying enter the market, and we saw the dollar really rebound off of these lows that it hit. And now if you look, it's back into the body or trading range of the prior week. And so traders, with that in mind, I do want to take a look at silver. This, of course, is our weekly chart. And any way we want to look at it, we're still looking at, on a weekly basis, a dark cloud cover in terms of the candlestick pattern that we're seeing right in here. We absolutely also can say that we got some real resistance, which came in roughly at 18. But I believe that the real resistance should have come in, although it did not, was about 1850. It is, on a technical basis, the point at which we traded to a high February of last year. And that, of course, corresponds to the high that we saw in gold, which was in around 1,300 per ounce. So you have these two coming in. Now, silver although it's been on a rampage, was not able to make a high that matched with this former high here like gold did. But nonetheless, it has been absolutely in a defined rally mode overall since this market broke below 14 and started trading higher, now trading well above $17 per ounce. Traders, recommendation, maintain your current long positions, maintain your current stops. I have been considering taking our stops to the market as we do have profits in gold, and at the same time, we're pretty much at a push on our silver trade. So if you're a little bit uncomfortable with the current trade, go ahead and pull profits on the trade in this area before the jobs report. That will be up to you. But as I said, I'm comfortable with a $20 price push, but what I'm not comfortable with is the fact that we've made lower lows over the last 4 days and have not even flirted with those highs that we saw last week. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.